The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. My name is John Needham. As usual, I'll be your host for today. Welcome to this webinar, and it's a great pleasure to have your company today. We've got a big crowd today too. It's wonderful. Nice to see you all. Greetings. Good morning to our Southern Hemisphere friends. As usual, at the Golden Coast in Queensland, the sun's shining. It's a beautiful day. The Pacific Ocean is beautiful shades of blue, and the waves look just fine. So pretty well everything's good. Our good friend Shift 4 is not with us today. He's taken off. It's a long weekend in Australia, apparently. Public holiday on Monday. I think it's Labor Day or some other politically correct piece of nonsense. And Shift has availed himself off for the long weekend to his holiday house up at McMaster's Beach. Sage, hi darling, nice to see you here and on the job. Thanks for that. Apparently everyone can hear me all right, so that's good. Folks, amazing, isn't it? The first 3 quarters of the year have gone. I mean, I don't know whether it happens to you. It certainly happens as you get older that time flies, and when you're having a good time, time flies even faster. We're now at the end of the 3rd quarter of 2014. We're taking a break next week. We try to take a break of 1 week a quarter, let people have a rest, catch up with their families, do all those domestic chores that pile up when you're trading full-time. So we'll be closed all of next week. There will be new charts on the weekend for those members that want to go on trading through the week, but there will not be any new trading TO3 or plus signals for the week. And the next set of charts will come up the following weekend. There will be no midweek charts. So I do ask you to encourage you to take a decent break while you can, because all the signs are that the last quarter of 2014 is going to be fast and furious, and of course a trader's market all the way. I'd like you to be really ready to fly into that. Terry's just asked me to say to you folks, any of you that are on a trial, your trial will be extended automatically by Terry to take account of our quarterly shutdown. We didn't take a shutdown in June. We didn't take a break. I was too busy getting things done, and this is our first break really for 6 months. So anyway, those of you that are on trials, don't worry. Terry will automatically extend your trial so that you have all the time you need to evaluate the various Danielcode programs that you may be interested in. Okay, on to the business of a couple of things. I wanted to just share with you some recent trades. See if we can get this screen moving. Here we are. I wanted to particularly, I'm going to show you some briefly some blue line trades, and you have to excuse me, folks. I've got a new headset today. If you have a nice, well-equipped office like I do, and you have children, mine are both at university, but nothing much seems to change. They have a great habit of coming in and grabbing Dad's things and either using them or not returning them. In this case, my headset has been used to extinction by the children, I suspect, watching videos, and it's broken, so I'm using a slightly different one that doesn't have a mute button, so you'll have to excuse me if you hear a bit more than I want you to hear. I wanted to show you some blue line trades and some plus trades that have happened recently during the week, because our interest, of course, is exactly the same as yours. We want you to do well. We want you to trade the best you can, make the most money you can, be full of enthusiasm, want to learn more, hopefully come to a Danielcode tutorial at some stage so I can get you really, really good at this stuff. But that's our main aim, is that your trading is successful and profitable, otherwise you'll lose interest. and we lose you as a client. So there's no conflict of interest between us. But these additional trades, I've talked to you about them before, the blue line trades and the plus trades, there's not a huge percentage of you that actually take them. The vast majority of you are just taking the TO3 signals. And I wanted to show you that there's much more to life. Some of our very, very best trades are the blue line trades because they tend to run for a number of days. They tend to be more likely to as intermediate turning points in markets. And our plus signals, which are usually the renewal of the trend after a counter trend. If I had to designate one signal as the best signals that we get in dollar terms, I would say it's the plus trades because it's this counter trend that gets people wrong, and then the renewal of the trend, which is what the plus signals largely pick up, where you get the big buck. So I'm just going to run through a few charts of recent trading so you can just see how valuable these signals are, with the hope that you will take some interest in them. And you're very welcome to contact Terry and ask for a free trial of the plus package, which will give you the blue line signals and also all the plus trades. Now, there may be a number of you who think that handling the TO3 trades is as much as you're up to at the moment. That's fine. But if you can handle more, you'll make a lot more money if you do subscribe to the plus signal. So I do ask you, contact Terry, organise a trial of the plus signals, no obligation. Try them yourself for a fortnight. If you like them, you can subscribe. If you don't like them, then, of course, no harm done. Let's move on to our next chart. Here is another. I'm not showing you these trades that they are any huge dollar value because they're all very recent. Some of them are going to develop a long way, others aren't. But I just want to show you just a brief picture of how many of these trades we've had during the week and how valuable they are. This is one that no one else got. This was a nice blue line buy on the Aussie SPI for you Australians who trade this market or are interested in it. That was, you have a look, this is a market in a very, very strong downtrend. We got that trade. I don't think anyone in the world expected the SPI to rally that day, except us, but it was a nice trade. I exited the market on close because you can see there's a strong downtrend in this market. Do you want to be long against this market? Well, maybe, but not right now. I want to see some more price action and get back into this trade if necessary. But that was a nice standalone typical TO3 trade. Here's gold, which doesn't show any money, but what does show is the point that if you have access to these plus signals, you will be able to more completely stay with the market. I often say the safest place to the market is right next to it, very close. Embrace it, hug it, stay close to it. And you can see here the little sell, the last day of the sell-off, and then a TO3 buy 2 days later. Very, very few people knew of those trades, but if you had access to the plus signals, you got those, and you get them to the stage that, together with the tradecraft stuff that I've been teaching you in recent months, you can pretty well stay with these markets all the time, and that's where the money's made. Because occasionally you might get the nice big run. I'm not going to show you T-bonds today, but have a look at the T-bonds chart, and you'll see that the huge rally, which is about to end temporarily at least, we were in that the whole way up. Every single bar was a wonderful trade. Here's another blue line buy. You can see a perfect blue line set up there at the target at 77.69, only about 2 ticks variance. The fast stochastic was oversold, the slow stochastic was oversold, and we had divergence on our proprietary CCI momentum indicator, and there are the requirements for a blue line trade, which was duly posted, and there's the result. Nice trade, might lead to much more. Same story here, GBP-CHF. Here's another blue line sell signal. The signal was actually generated 2 days before that. Let me find my little spotlight tool over here as usual. There he is, and you can see it's this bar here, and it's a high finding the target at 155.32 with great precision. That set up, excuse me, there's the lack of the mute button. That set up the blue line trade, which was posted for the next day valid. Blue line trades are valid for 3 days from the day of posting, so it was posted for this day here. It was not elected, but it was elected right here the next day. Nice trade. If you didn't have the access to the blue line trades and the other plus signals, you missed that. So they're the sort of extra opportunities that are available, and I really do urge you to consider having a trial of them. You will more than double whatever your equity return is now if you can handle additional signals. And there's not a lot of reasons you can't, I guess, except you know, just the manual requirement of creating the signals, which can be onerous. Or you could use one of our auto trade programs to do that if you wish. Here's our compliance statement. I'm always required to show you this, and it's serious stuff, so do please take it seriously. Free trials, anything you want, just go to the Danielcode website, hit the register button, follow the prompts, and that will switch on all of our products. I think Terry now has a blanket policy that if you ask for trial, he'll switch on everything. So you can have 2 weeks of everything we do and see what's worthwhile in that for you. Okay, so let's leave that. Let's move on now to our website here. I wanted to just refresh the memory with some of you. We click on this link here that says Trade Program. You put in whatever your account balance is there and your risk requirement that you want to risk. Click the Calculate Contracts button and you'll see it comes up with every trade for the day. Now, some of these trades were posted 2 and 3 days ago, so this program, which is quite brilliant, carries forward any trades that were not elected. So if you're not keeping score of them, they're automatically carried forward here for you, and you just can type in the number of contracts you want to take, and it suggests the number you should take based on your account size and so on, you just click this calculate total value at the bottom here. Take a moment to come up for you, and there it is. I'll scroll down so you can see it, and there it tells you a bit too savage there. It'll tell you, there you are, there's what the trades are that you asked it to tell you, and it'll tell you what your total risk on entry for that trade is, and that trade, and this trade, and it'll give you the total at the bottom. It's basically what we suggest is that until you get very competent at this stuff, you restrict yourself to no more than 2% risk on correlated contracts, which I've talked to you about before. For example, over here, this market is CAD, Canadian dollar, and the chief, which is the Swiss franc, and this next market is Canadian dollar, Japanese yen. So they both have CAD in them. They both have CAD as a component, therefore they are correlated. And over here in the column headed correlated trades, it says yes, they're correlated, and it's adjusted the contracts at defined risk accordingly. It knows that they're correlated, and it knows how much it should be reducing those trades by to keep you within your risk parameters. Okay, so that's that, folks. Don't forget the fourth seal. These are the markets we covered: DAX, S&P, crude, natural gas, copper, T-bonds, DX, and gold. Lots happening in the fourth seal. Let's have a look at gold at the moment. It's at a pretty interesting position, as we're going to see on our long-term analysis. We're looking now for a turn, waiting for confirmation on the 6-day chart. So this was our main 62, tends to be a bottoming cycle. This looks like it's slipped through onto this next group of cycles, 44, 70, 89. But for some other reasons I've told you, gold is very likely to have a turn soon. It's certainly trying to put in a low. So don't forget those 4 seal charts. If you'd like to have a look at them, you can look at them for free. It's a you can have a free trial of those markets. And as I've said before, if you bias your trades, if you use the 4th seal as a trend indicator, as well as highlighting important market turns, you'll find that you will more than double your equity returns. Okay, so now let's have a look at these bigger markets. With our preoccupation with trading, where we're always looking at daily charts, we don't have the weekly charts anymore, which I personally regret, because I think that they're an important source of market knowledge. But nonetheless, I wanted to step back and show you where these markets are on these very big charts. So let's start with our SP trend charts. These are 24-day charts. This is the biggest chart that we use for 4th seal and timing. And it's kind of interesting to occasionally flick onto these charts. It's very easy to create one. You just click this custom bar period here, click the daily tab, and type in the number of bars that's required. So on this chart, each of these bars is made up of 24 trading days. And it's very interesting to just see where markets are relative to their historic position. For example, there's an enormous amount of angst going on in rural communities in America and indeed Australia about the price of wheat. This is the wheat chart, and you can see that from about 95 until 2007, this market traded in a complete consolidation, right about there. And it traded between 600 and 270, 280, 240 for years and years and years. Then we had this nice blowout top here, and it's on its way down. But despite all the drop in the wheat price, it's just getting back to its historical norm. Now, the problem for farmers with that is that input costs have raised hugely in that period. You're talking about almost 2 decades, 15, 17 years. Input costs have gone up enormously. On the other hand, so have production techniques, and productivity in farms is everything. But it's interesting to have a look at that. Let's have a look at a few of the others. I did really want to show you this Aussie USD. It's got a few marks on it. This is historically, put you in the picture. I don't know how much more data we've got here, probably quite a lot. This is traditionally, there's the buck up there. That's $1 US. And traditionally the Australian market has traded at a substantial discount to the US dollar, and so it should. We have an economy in Australia that's I don't think it's as big as the state of California's economy on its own. It's really a very small economy in global terms. It's not a terribly smart or sophisticated economy. It relies on, traditionally it relied on agricultural, pastoral pursuits, beef and sheep and grains, and then, of course, we got the mining boom, which, again, is not terribly high-tech. You just got to find it, dig it out of the ground, put it on a ship, and send it to China. But the dollar value of that has been absolutely immense, and the cost of developing these big mines and bringing them on stream has been quite staggering. And that's what's caused all of this huge rise in the Aussie dollar to the stage that for some period of time up here, from here we are, here's December 2010 through to May 2013, for 18 months, the Aussie dollar was trading above the US dollar. and as much as, here we are, let's see where we are, we're up at 8 cents more than the US dollar, which is absolutely absurd. And the economist rationale for that is the demand for Australian dollars was driven by the cost of developing this huge infrastructure for these massive mining projects. And you're talking about BHP, Billiton, and Vale, SA, and those sorts of companies. It's big deal, big time development. But if you stop to think about it for a moment, why would that increase the demand for Australian dollars? You know, I mean, I can understand it raising the demand for US dollars because nearly all of that equipment's made in the US. I mean, it's just been a long-term birthday party for Caterpillar and John Deere and the big equipment makers. So, you know, some of that just doesn't make any sense. The real story is that it's been an interest differential story, that the US dollar's been down at minimal interest rates, as you all know, I certainly do, and the Australian dollar, the bonds, Australian government bonds, have been returning 2.5%, 3.5%, corporate bonds a bit more. So it's actually just been another carry trade that's had that dollar up where it is, and that has caused untold damage to many Australian businesses. But, you know, who knows what goes on in the minds of our masters in Macquarie Street, but at least it's coming down a little bit now and getting some relief. I showed you this chart about a month ago, more than that, a couple of months ago, and I showed you it was oscillating within this downward running. Let me have a spotlight for you to make it clear. Here we are. This is a Danielcode trading channel running down here. The darker blue or the stronger blue line is the median of the channel, and these lines above and below it are one standard deviation from the mean. If you want to draw these Danielcode trading channels yourself, you can. There's a webinar at the Danielcode website. Click on the videos link, and you'll see a webinar devoted solely to how to draw these trading channels, which are really things of great beauty. And the setting for most currencies is 1.62 is one standard deviation. You have to put that in manually. The software doesn't know about that, I guess because the guys who write the software don't follow the Danielcode. But most currencies run on 1.62. All futures markets run on a standard deviation of 1.593. That's 1.593. So you can run these yourself. And markets will run in these channels for very long periods of time. You can see that this original channel we had on here started right down here in October 2008, and it kept running all the way up to August 2011, at which stage it encountered a Danielcode fourth seal line. That's what these red lines are, and it took a few months to get the message and make the turn. But it never went back to touch, excuse me, the heights of that fourth steel line again, and gradually it started to wander off sideways until it formed a downward sloping trend channel, which is where it is now, and it's running down there. So its next target is going to be this Danielcode number here, 85.43. It will get to the bottom of the this channel and bounce. And eventually it will settle somewhere along this red line that I'm showing you here, which is considerably lower than commentators have it or believe. So I'll be looking for the Aussie dollar to gradually wander its way down to about 80 cents, which is really where it should have been all the time. Let us move on now, and I want to show you the equities and gold. I know a lot of you are very interested in gold, where it is and what it's going to do. And for gold, let's see if we have anything on the bigger chart. This is our 12-day chart. I think we've been doing most of the work in gold on the 6-day chart, but let's have a quick look. Oh, well, here we are. Here's our 12-day chart. We did do some work on this, so you will have seen it. So here was our high up here, September 2011. Was a good day for Under Par and Mrs. Under Par. They were lucky enough, and so was I, to have their company at a Danielcode tutorial in Colorado Springs, and they were pretty substantial holders of gold bullion. And Jeff came to me during the webinar and said, "Do you think that's the top?" Because we had sell signals. I talked about it. I said, "Yeah, that's probably the top for gold for quite a while." And I know that they did sell a good lot of their bullion up around that $1,800 mark, which is quite a lot more than you can get now. So that was an interesting couple of days, but away gold has continued to fall. But look how precisely it's falling. It's really not much drama in this. It looks like drama, and if you bought gold up at 1700, I guess it is dramatic. But from a charting point of view, it's not that dramatic. And I'll show you why on the long-term chart in a moment. All this is at the moment is a controlled correction. It could turn into something else at any time. I had an email from a chap saying that we had said in the fourth seal that back here, I think in December 2013, that was likely to be the low for a good while. And he said, it can't go any lower, can it? Because you said that was the low. Well, that was the low for a good time. It doesn't mean it can't go any lower. We don't have any foresight into what markets will do. We can give you pretty informed, high probability decisions based on our analysis of market conditions and the charts, but nobody actually knows what tomorrow will bring. And anyone who suggests to you otherwise is a liar or simply pulling your leg, one of the two. Nobody knows what the future will bring, including people who deal in financial markets, but we can give you a very good idea of what markets will do, as all the way back here when I told Mr. and Mrs. Under Par that was probably the high, and gold was a good time to lighten up on their load of bullion, which I know they did. So now the market went sideways. Markets, when they're forming tops, often take a long time to get that top set in, which they did. Eventually we got a decent breakdown here, and look at how it's just run down these Danielcode numbers. It's tested this 1186, which is an important Danielcode ratio. You see them on all of our charts. They're just the normal Danielcode ratio. It's tested this twice, 1, 2, and now it's being held by the black line of the minor swing. And just let me show you that. This is the major swing from this high to this low. This is the previous major swing from that low to this high. And now we're operating within this swing from this low here up to this high here. This is the operating swing, and we're working within that. So we draw our Danielcode ratios within that swing, and 1204.6 happens to be 89%. That's the Danielcode black line. The last point of support or resistance in any chart on any operating swing, and that's held the market at that number basically for a couple of months. This is a 12-day chart, so it's held it there for the best part of a month. From there, I'm almost certain we didn't have anything on the 24-day chart. Yes, we did. Here it is. So you see the same thing on the 24-day chart. Let's expand that a bit so it's a bit clearer. Here's the 24-day chart. Here was our sell signal right at the top of the market. Here was our first Danielcode fourth seal, found the area for it to bounce. And look how this market's run down this Danielcode trading channel. I mean, it's just tracking it with a very, very high degree of precision. If you're going to use this tool, incidentally, folks, make sure that this button here, Dynamic Stay at End of Visible Data, is switched off. If it's not switched off, this line here will continue every time there's a bar or part of a bar, and eventually it will get to the stage that it's become a regression channel instead of a Danielcode trading channel. To be a valid Danielcode trading channel on the downside, it has to have contact with this initial point here and at least one other point, which it does here. This has just about been defining this market on the way down, and if it breaks through, you can then go from number of channels here from 1. You can expand that to 2 or 3 or more if you like. But you can see here this market ran down, hit the Danielcode support line at 1186 and broke through momentarily the bottom of 2 standard deviations. This is the median here, so this line is 1 standard deviation, this is 2 standard deviations. Markets very rarely go much past there. When they do, they're in a complete collapse, which this market is not. This market has bounced from there, found the median, tracked down to Danielcode, same number, 8680, rallied again, and it is also at the black line for the swing on the 24-day chart. And it's interesting, if you think about it, how these markets all line up. We're using a 6-day, a 12-day, and a 24-day chart. And the swings are all different, of course, but the Danielcode retracement, they're all saying exactly the same thing, because markets are ruled by the Danielcode. That's the way markets work. Danielcode is the DNA of all financial markets. So, you know, what do I see from this? Well, you don't have to be too clever to work out this market is desperately trying to build a base. It's trying to build support. It's been at or around this level now since July 2013. That's what, 15 months or so. It's really been hanging on to these support points. Every time it gets there, it finds support and kicks back up. Now, let's go to our 6-day chart and finish our view of gold. This is pretty complex, this chart. I'm going to make it a lot simpler for you, so don't panic, don't reach for the smelling salts just yet. We can make this all a lot simpler. Okay, you've seen this chart before, folks. I've been showing this to you for a few months, and the interesting thing is the way that this chart is completely dominated by its Danielcode numbers and its 4th and 5th seal lines. To an extraordinary extent. For those of you who haven't caught up with this stuff, which we sort of deal with progressively at every webinar, pretty much every fortnight or so, this gold chart, way back here in July we started talking about it. I'll grab my highlighter again, which is Spotlight, they call it. Here it is. So we had this 4th seal line here caused the first bottom at a Danielcode number. Here's this same Danielcode number, been on the chart for months, and up it went into point number 1. Now, this is not some excuse me, I don't have my mute button today, so you're not going to be spared the occasional grunt and unsociable noise. Yeah, but I promise you I'll have a new headset by the next webinar, folks. So this is not some construed Elliott wave count. This is just like normal numbers that normal people use to show you 1, 2, 3, 4, 5 different points, and the next one will be 6. So the market ran up here into this Danielcode 44% retracement, stopped there, 66 time cycle, which is 1.5 times. The time cycle for gold is 44. If you'd like to know why, go to the Danielcode website, click on the Articles tab, and you'll see 2 articles I've had published on market timing. One is called Masterclass 1, it's about time. The other one is called Masterclass 2, Timing Gold, and it shows you in complete detail what the timing cycles for gold are, and the dominant cycle for gold, of course, is 44. Okay. Terry's telling me that the audio is cutting in and out a bit. Maybe I've been mumbling. That's better. My apologies, folks. This new headset I've got had just slipped around and the microphone had dropped a couple of inches. It wasn't quite giving you the clarity you need. So thanks for letting me know that, Terry. We've corrected that. So here we were at point number 1. And it hit a Danielcode time cycle specifically for gold, and it started to run down. It came down until it found this first number Another Danielcode retracement. Any of you that are Danielcode members, you've got this software. You can create exactly these same charts. It turned from there and it ran up to this point number 3, at which it encountered a red line. That's a Danielcode 4th or 5th seal line, and a blue line, which is a range extension Danielcode number, and it stopped like it was hit by a train, and down it came, and it ran its way down. It found support in this bottom line here. This is a support line. It bounced for a few weeks, and down it went until it found this number 4, which happens to be a Danielcode 4th seal line, which gave it support, sent it up into 5. Same thing. See how markets keep doing the same thing again and again and again. When you get used to this, you will just see these patterns repeating. There's where did it go? If it's going to rally, it has to go to a number. All markets go to these Danielcode numbers all the time. It happened to find the 1346 Danielcode blue line target, and also hit one of our 4 seal lines. That stopped it. That was 0.5, and down it went. Where did it go? Have a look at this time cycle down here. 44, that's the time cycle for gold, and it's valid for plus or minus 1 period. And the reason for that, excuse me, is that the start of these time cycles can either be drawn from a chart high-low, that's a bar high-low. For example, let me give you an example. Here's one. This is a bar high-low. This bar is the highest bar in this structure. But the previous bar, right there, that bar has the highest close on it. So we have 2 bars next to each other. One has the closing high, and the next bar here has the highest high. And for conducting Danielcode time cycle analysis, it is valid to start your time count from either of those bars. So that's why this stuff is valid for plus or minus 1 week. So a variance of 1 week is allowable. We looked at this 44 cycle weeks and weeks ago, and I showed it to you on a webinar. Look what's happened. The market ran down here, went slightly through the 4th seal. Next bar here closed right on the 4th seal. Next bar here hit the black line, 1204.60. Again, another. It's been on the chart all the time. That 1204.60 comes from this high to this low. So these numbers have been on here for since that high was in place, which is back in January. So you can see this stuff weeks and weeks, months in advance. And if you're doing this longer-term analysis, which you only have to look at once a week, once a fortnight, it gives you a better feel and a better picture for where the market is. If we're only looking at short-term charts, daily charts, and nothing else, we lose the total picture. It's like driving a car. You may only be looking at the next 100 or 150 feet in front of you, but you'll be a much better driver if you're aware of what's further down the road and the conditions you're going to encounter. And the same here. So this showed that it locked right onto this 4th seal number, and then the next week, that's the current period now, which expires on Wednesday, incidentally, it's done it again. It's been hovering right around that number. It's found that black line support. The probability is this market is going to rally. The question is it a rally just back into the operating range, up to 1346 or higher, or is this a low that's strong enough for this market to build on and start taking off? I think nearly all commodities, I want to show you a few more charts, are basically in a deflationary cycle, which is a good thing. Everything, in my view, is overpriced. This financial easing and the lackadaisical approach of banks has allowed far too much money into the system. Basically, your dollars are being devalued all the time. That's what inflation is. It's not so much price going up as the value of your purchasing power going down. So as a consumer, you should always be against any form of inflation. You should be hoping for deflation, because as prices come down, it means your purchasing power of your dollar is going up. And I know that economists and bankers have an absolute fixation with promoting inflation, because that way they get additional tax revenue for the government, and bankers can devalue the value of their long-term borrowings. So inflation is a game played by governments and big business for their benefit and your cost. So start beating the drum anytime you hear someone saying, oh, well, we're not meeting the inflation targets. Inflation is a good thing. Inflation is not a good thing. Inflation is devaluing the purchasing power of your currency. It is not to your benefit. We'll scan through a few other commodity markets, and gold is a commodity. I know people say gold is money. No, it's not. You take your gold, see if you can pay your income tax with it. You can't. It's not legal tender. It has a fixed value because it has historically had such an important and has been the monetary system of many countries and empires over thousands of years, but it is not money. It is a commodity. There is generally a deflationary bias in commodities, which we'll scan quickly if I don't talk too long and run out of time. But I know a lot of you are very important about gold. I think gold goes on building a base for the next foreseeable period. Now, we have these webinars every fortnight, and we'll certainly do another quarterly review in December, if not before then. But in the meantime, you can follow the fourth seal on the Danielcode website for gold. You can subscribe to just the gold market if you like, or many more, and that will give you the first heads up we found support. It's valid support. It's the most important Danielcode number. We've got two tests of the fourth seal. This is very, very strong support. My guess is it rallies, but how far does it rally? That we'll only know as it reveals itself, but you can be sure we'll know before anyone else does. So I do commend that to you. Let's move on. You gold people can feel reasonably happy about things for that, and for those of you that don't, say, isn't it terrible? Let's have another quick look at the 24-day chart just to show you in gold how incredibly strong this market's been. Let's ramp this up a bit here. There you go. So this is 2000. There's a lot more data here, as you can see. Here we're way back to 1976. Look where your gold price is. Roaring. Look how minuscule in the long term. Excuse me. Look how minuscule in the long term this correction has turned out to be. And so far, it's only a correction. So don't despair. But more importantly, I know I'm never going to convince a lot of my friends and clients, the gold bugs. I'm never going to convince you guys that gold is there for trading, not for holding. But good luck to you anyway. I think the odds are we get a rally here, and we'll keep an eye on that. The fourth seal in particular. I know Frank, the young gentleman who helps me with that, is very much a bull on gold, and he's got a lot of investments himself in physical gold in one form or another. So do keep your eye on the fourth seal on gold. Okay, so that's gold. We're fairly comfortable with that. Let's have a look now how our friends the equities are going, because we've been a little bit more bearish on those. Let's start with our 24-day chart. Incidentally, there was my email. Any of you who have any questions that you'd like answered at subsequent webinars, jneedham@thedanielcode.com. I do take a few days to reply to emails. It's not that I'm being discourteous, it's just that I'm involved in a number of fairly major technical projects with our new FractLen Pro, and we're starting to code up the Fractalian system, and I get involved in these technical things which I don't understand because I'm a humble country lawyer. But I do understand that I've got to monitor them and try and keep everyone pulling together. So I do have some days when I'm not attending to emails. If I don't reply, please excuse me. It doesn't mean I'm ignoring you. You will get a reply. It may just not be quite as promptly as you would like. Here's the S&P, folks. Here's the index. We, as you know, called this low down here in March 2009 to the day, and a few ticks. We said 666 would be the bottom, and it was. And ever since then, we've been long expecting this market to be at 2100 by Christmas, and we're not going to be far off, because we're at been up to 2020 now, and it's continuing to go. But look what happened back here. This is June. I wrote that article, S&P in a Cocked Hat, which is at the Danielcode website. Just go to www.thedanielcode.com, click on the Articles tab, and you'll see that article, S&P in a Cocked Hat. And I told you why this was likely to form something more than a short-term top. And the red lines that caused that argument to come forth are these two here, which are Danielcode fourth seal lines, which forecast future price markets in all targets in all markets. And up here we had this very long-term red line coming from way back before the 2007 high, and this fourth seal line from the low before the 2009 low, intersecting right here. And I said that would be an important point and would likely force a turn. What's happened since then, as you can see, this is our 24-day chart. So for 1, 2, 3 markets, for 3 months, this market has not been able to break away from that lower Danielcode fourth seal line. This was our last time cycle expired. Next bar went up, hit the upper of the two red lines, reversed. This bar tried to go up, couldn't get past the red line, closed at it. This bar opened at it and traded down slightly. We haven't been able to get a close up above the Danielcode fourth seal line. And right now, on this current bar here, which will expire, let me see when, we'll have to get our cursor back. We have, get the cursor. Gosh, you think they could make this easier? Here it is. This one's going to expire on October the 10th. Remember again, plus or minus 1 period. We have a 59 cycle expiring. Now, in about a few hours from now, folks, I'm going to put a new article up at the website for you called The Death Cycle. And it's written by Frank de Beer, who's one of my students who helps me with the fourth and fifth seal analysis. Very, very bright young trader who'd never seen a chart until he came to a Danielcode tutorial in Taupo a couple of years ago. And he's got very, very good at this stuff. In fact, he's running third in the Robbins World Cup Championship of Trading. Even though he's had a lot of technical difficulties. He lives in Belgium in the country, and he's a farmer. He doesn't have a lot of access to good technology, and he's had a lot of internet teething problems with using Robbins' new tools, because of course Robbins insists you trade on their platform, which is all new to him. But anyway, he's running third, I think he told me, in the World Championship of Trading, and he'd never seen a chart 3 years ago until he came to one of my tutorials. So that's how good I can get you, and I can get Frank a lot better if he can come and spend some time with me. But nonetheless, there's your 59 cycle, and he's written an article about the Danielcode death cycle, which is 59 first hop. This is not the death cycle that you're seeing now, because this cycle here comes from a low, and that's not the Danielcode crash cycle. This is this 59. It's expiring right now, and this I put the start of it here for you. It actually runs from this little high before the low here, I think. I can't quite line it up, but it's not a death cycle. Death cycle would have to be high to high on the first hop. Whatever else this is here, it's a counter trend, and a low, it's not a high. But there are a number of first hop death cycles apparent on the S&P chart. So this article from Frank, which I'm just settling for him now, will be put up in the next few hours. Now, it might be a little longer than that. It might be this evening, my time, so I don't mislead you. It's 11 o'clock now. My daughter's at university. When she comes home, she'll put that up with a banner on the front page, so you can read it tomorrow or over the weekend. But don't miss it. It's very important, and we do think that around about this period we should be getting some sort of better than average correction. Now, I know you hear the screamers all the time about it's the end of the world, blah, blah. We don't do that. We've been long and strong and bullish this market since the low in March 2009, and this is the first time we've said that the probability exists for a reasonable correction. And note, we're not talking about crashes or anything of that nature. We're simply saying it got these conjunctions. It had this cocked hat here where it ran into the overhead resistance from the 4th and 5th seal lines, and that's gone on, and the 4th seal line has held it. That means that we are probably going to see a correction of some sort. And, we need a correction. Markets that go one way like this are bad markets. They are markets that are inherently weak and they lack structure. A safer market is one that corrects, because a market that corrects has to find additional support, and it's a healthy market. These markets that are forced one way for long periods of time, it's a bit like the tectonic plates. Eventually there'll be a slip somewhere, and the movement will be a little bit more savage than it needed to be. So there's our first long-term look at that chart. Then let's move on to our 12-day chart and go find the S&P, which is here. And this is our 12-day chart. This is our next time period down from the 24. And we see pretty much the same thing. We had a lot of gold cycles running along here, which have failed to do much, except give us a little correction. Now, these time cycles are interchangeable. Our dominant cycle for tops is 59, and our dominant cycle for bottoms is 62. But the other cycles, gold at 44, and the heathen cycle at 70, you don't see that often except in the euro, but they can make their appearance on these charts also. And here's your cocked hat again. Here's the cocked hat, and although this is a different time cycle, we've moved down from 24 to 12, you're getting exactly the same thing. See, here's this market. It ran up into this cocked hat. That's where all these lines intersected. It pushed past them too, but it couldn't break the upper Danielcode 4 seal. That's still ruling it, and now it sent it down here, excuse me, for a bit of a correction. Let's move on, see if we can learn more from our 6-day chart, and that should be over here. Here's our 6-day, and we'll switch this over to SPX, dollar SPX. This is the index, and here's the same thing again. Gold cycles along the top, 59. These are 59 cycles in black. There isn't one there, but this market's just been suppressed by the Danielcode 4 seal. If we switch this over to the E-mini chart, because this one's getting a bit busy, you will see that here's the E-mini running along its, cuddle this up so you can see it, and it's quite extraordinary. Folks don't think markets are organized. What could be more organized than this? I mean, here's your 2000, this is the, where are we back in here? That's 2011. This is only the secondary push-up. 2009's way before that. But here's the latest leg up, starting from about August 2011. This market has followed the Danielcode trading channel all the way. All the way. Every time it gets to the 1 deviation, you don't see a close below it. It rallies back, it rallies back. The only time it's broken, it went to 2 standard deviations, rallied back to the median, up to 1 standard deviation above, broke to 1 standard deviation below, back to the median. See how this 1 below median has just supported this market all the time, all the time, all the time, all the time. And it's continuing to do that. So far, all we're seeing is a standard correction, which has happened periodically every, I don't know, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, there's about 12 of them since 2011 that I can see. And so far, that's all we're getting. And So long as the first channel, or indeed even the second channel, holds the market, the trend is still up. So be aware that we think this is the point with increased opportunities for a more substantial correction. And if we were to get a more standard correction, we can just click on this channel, put on our third channel, and we would expect the correction to come down here. This would be about 1700, 1800. About 1800 maybe would be a decent correction. Now, people would be dying at that. They'll be jumping out of buildings because they don't understand markets. And markets fluctuate, and even markets like this that have been forced up and up and up and up due to the huge amounts of liquidity provided to the broker-dealers by the US Fed. The fact is that markets still have to correct. The laws of gravity have not been repealed, and what goes up will have to come down. Now, excuse me, let me issue a caveat against that. Whilst the laws of gravity haven't been repealed, the laws of engineering in markets are changed all the time. And these indices, which are composites of 30 markets with the Dow Jones, 100 with the NASDAQ, 500 with this big S&P, they are designed so that the weakest markets are continually taken out and discarded, and stronger markets are added. You may not know that. But by doing that, they engineer a bias for this always to be a rising market from left to right. Which is the tool that's used to seduce long-term investors into handing over their money to brokers and mutual funds, etc. But anyway, that's where we are with your equities. You can see that we've shown you on a number of occasions that there's potential weakness here. I do want you to have a look at the fourth seal. I'm going to put Frank's article up in the next few hours where he'll expound on that more, and you'll see that there are a few Danielcode death cycles current at the moment in US equities. So be prepared for something more substantial than the normal correction. And a normal correction is what? Well, one standard deviation down to here. That's 1912. That would be just a normal one period deviation. After that, your next target's going to be down at 1853. If we get a really decent correction, which I'm hoping we do get, it'll get down to 1820 or so, which will be lots of fun. And remember, for us, we don't care whether markets go up or down. We get paid exactly the same both ways. What we do care is that they're moving, and nothing will induce volatility in equities quicker than a nice sell-off to panic the horses. Okay, let's see what else we've got, folks. There's our hour is up. I don't like to keep you too long, but I do have, I'm sure, some questions to attend to. Let's see what we've got here. All right. Not many. Not many. Okay. So it is in Los Angeles, Steve Roy. I don't know what is in Los Angeles, Steve. Email me, tell me more if you need to. John, will subscriptions be extended a week to make up for no signals being generated next week? No, we don't do that, John. If you're on a free trial, they will be. Anthony Avery, can you show trades that did not work and how you handle them and what win-loss ratio is? Yes, surely can, Anthony. I wonder if I have one that easily that I can show you. If you just bear with me for a moment, I might. No, I don't, mate. It will take me a moment or two to pull that up. Anthony, would you drop me a line about that, please? And I'll give that some attention in the next webinar. That's a good question. Trades that did not work and how to handle them, and the win-loss ratio. Shoot those to me, Anthony, if you would. If you shoot me just an email, just a couple of lines, prompt me. I'll attend to that for you at the next webinar. Hey, Toddy, how are you, mate? Could we have a look at soybeans and wheat chart, potential turning point? Yeah, we've got a buy signal in for wheat today. Let's have a look at the what have we got here? Here's wheat. Get rid of all this other stuff. We did an examination of wheat recently. Same thing. I can't show you, Toddy, but I could at the next webinar if you want to. But we have blue line target recognition here. I'm just looking at my other computer while I'm talking to you. Just bear with me. We have wheat. Yeah, we have a blue line right here. We had a started generating buy signals. Gold, silver. Let's run through the list here. Right now, wheat. Started generating buy signals last week in wheat. And then got this little buy here. It didn't get elected because it was from an inside bar. One bar down here, the trade was elected on the buy side. This could be a bottom in wheat for the time being at least. I wanted to show you the longer term chart that I'd made a comment earlier about how many of these commodity markets have been in long term deflationary trends, and here's wheat. As you can see, let me cramp this stuff up. Here's wheat. Here's a nice long trend down, and the median is way down here somewhere. The other market you want to see was soybeans. Here's soybeans. Let's go to the 057. We've done a bit of work on soybeans, as you can see in previous webinars, which is why we've got these fourth and fifth seal lines on it, and the price targets, which it's rapidly moving through. That one's gone, and so is this one. But look where soybeans have gone to. It's right at a fourth seal line. That's really strong target recognition on the 24-day chart. On the daily chart, we have got we had a blue line buy signal for today. Toddy, you probably know that. Soybeans. Let's see where we are. We had a buy signal a couple of days ago. Wasn't elected, and on Thursday we had a buy signal in beans, and you'll see that. That was elected, and there it is. There's the buy signal was elected. We're long, and we need this thing to start building its way up there. Got that. Shift is here, crikey. Delayed my trip because I heard you'd be showing more Sage photos. Ha ha, Sage! Shift was waiting to see more photos of you. And the hounds are not happy, by the way. That's the G&T. Shift's got two large savage hounds there, about the same size as my dog Mighty. These are called Gin and Tonic. They're great fellas. Shift, I'm glad to have you here. I didn't think we had you, mate, but there we are. Thanks for being here. Enjoy Monday. I've just found out you're the one who told me it's a public holiday. Not that it makes any difference to me. I don't really work on Australian time, but you will. So have a great time up at Macca. Okay, Bill, for the S&P, does the 59 time market indicate a short-term top or bottom? Yeah, it does. We'll go and have a look at the four seal sheet in a minute, Bill. TN David, any update? TN Fraxo Pros and TN Fraxzen Pro release. David, yes. We finished the back testing. We're now involved in forward testing, which Trade Navigator is conducting themselves. It's a new program for us, Fraxzen Pro, and it's working on a new platform from Trade Navigator called Trade Clone. So there's high levels of concern that it works correctly the first time, and after I was happy with it, Trade Navigator asked that they be permitted to do a month of forward testing on it, which they're doing now. I have to say that we have found two bugs in it. In that process, so they turned out to be right and wise, and they have been fixed and seem to be working satisfactorily now. So we will have presumably another 3 weeks of the forward testing, and we will then be able to release the futures, David. Next week we'll start testing Forex on the trade clone program as well. That'll be a week or so behind. Okay, there's Bill. What's the cost of my seminars? They run for 3 days. They're $7,500 US, Bill. And they're a bit of a party, Shift can tell you. We have a cocktail party on the Tuesday night, teaching on Wednesday, all day Wednesday, half day Thursday. We usually go out on a fishing safari or do something exciting as a group on Thursday and have dinner together as well. And then we wrap it up about lunchtime Friday. So it's 3 days full on. We have a couple of functions together, and you get to know some excellent people, make some great friends. What about silver? It's a bit like gold, James. It'll follow silver. It's trying to build a bottom as well, and we have a buy signal for silver today. It's an inside bar buy signal. What else have we got here? Shift is watching naughty movies from Puerto Rico, wildlife and such like. That's from Sister Sage. Good on you, folks. Good on you. Okay, folks, that's it. You've got about 10 minutes over time, for which I apologise. Our Fraxen Pro, incidentally, who was the guy who asked that question, was, let me find him, was it Bill who asked about, who asked about Fraxen Pro? I've got to find it again, hang on. Okay, I can't tell you. Anyhow, here we are. David, Fraxen Pro. It's up $3,000 in open equity after its first week of forward trading. And that's one contract per market. So one swallow is not a summer make or anything else, or not even great for beer, one swallow. You need about 100 jugs, don't you, Shift? Or a bucket, as we say in the business. But it's a great start. It's up. Terry's on the other line telling me it's plus $3,000 in open equity after its first week. That's what we like to hear. I'm terribly excited about this Fraxen Pro. I mean, I'm just trying to keep my mouth shut and not say anything because, it's a long journey to get there. But look, if it works the way I know it can, it's going to change all your lives and mine. And that's a big statement, I'll tell you. Okay, folks, enjoy your break. You're going off for a week's holiday. I'll update the charts. Don't know about Go Wallabies in the box. Shift. I'm a honorary Kiwi, certainly as far as rugby's concerned. I've been following the All Blacks for the last 12 years, and I have a few of them as clients. So go the ABs is the answer. The great world's best rugby team for many years now, and they certainly play a great brand of rugby. Shift, you need to get Australia reorganised. It's your Aussie rules guys, I think, that have taken all those tall fellas and those big number 4s and 5 second rowers that weaken the Aussie rugby because they're all playing Aussie rules, which I know is you're a bit of a crossover. You played them both, which is marvellous. Folks, enjoy your weekend. I'll be working like a dog trying to get all this stuff ready for release and development, but I do hope you have an enjoyable week. I'll update the charts on the weekend, but there will be no new charts for the midweek update, and there will be no new TO3 and plus signals for this next week. So enjoy your break, turn your computers off, kick back, have fun. If you're where I am, you can get started on the Bloody Mary straight away and straight to the beach or the swimming pool. It'll be very nice. Shift, thanks for putting off your holiday to join us, mate. Great to see you and you, Sage, all my friends. I'll talk to you when we get back in a week's time. Thank you for your attendance, folks, and bye-bye.